Assalamualaikum and good evening. Welcome to our forum discussion organized by University Utara Malaysia, UUM. I'm Nur Shariah Nafisa binti Abdullah, moderator for today's forum. Today we are gathering to deeply discuss the current hot topic in banking and finance, which is the regulation and guidelines between Islamic and conventional, which Bank Negara Malaysia plays an important part in. But before we start, I would like to introduce our special panel for today. Our first panel is Ms. Nur Ain binti Muhammad Norizan, and our second panel is Ms. Siti Nur Hidayah binti Zahid, followed by our last panel, which is Ms. Nurul Iman binti Asmadi. How are you guys? Is everyone feeling good? Okay, without further ado, I would like to start our discussion. As we know, Bank Negara Malaysia plays an important role in finance institution in Malaysia. Bank Negara Malaysia does not only cater toward conventional but also Islamic finance. It has guidelines and such on how to conduct the transaction and business. To define conventional and Islamic bank generally, banking institution known as a conventional bank lend money to borrowers at high risk interest after borrowing it from depositor at low interest rate. In contrast, Islamic law forbid the payment of interest. Therefore, Islamic banks share profit with both depositor and also the borrower. Meanwhile, Islamic banking is a term used to describe a financial system that abides by Shariah law, which is also known as Islamic law. Islamic banking is founded on the guiding principle of justice for everyone, mutual risk and profit sharing between parties, and transaction based on core company operation or assets. There are some distinction between conventional and Islamic banking. The conventional bank view lending money at a profit and sees it as a commodity, while Islamic banking products frequently incorporate renting, trading, and involvement in profit and loss situation using asset as a collateral. Therefore, I would like to ask the first question to our first panel, Ms. Ain. What is the legal framework for banking regulation that is provided by Bank Negara Malaysia?
All right, thank you so much to our moderator for today's forum, Ms. Shahida. Okay, actually, since the demand for Islamic finance and banking product has shown that increased trend and for the recent year, they actually has a result in the development of the complex Islamic financial solutions, which is according to the environment of Islamic finance. And the central bank, which is Bank Negara Malaysia, I believe that all of you know, which is a BNM, plays their roles to promote the monetary and financial stability for our sustainable growth of the Malaysian economy. And some of the function of these central banks are it preserves the internal position and the value of the legal tender currency of the country. Besides, they also control and regulate the credit in the country, which is by using the monetary tools such as the interest rate, the money supply, and also the credit restrictions. So regarding to the question from our moderator, which is Ms. Shahida, the regulatory framework for Islamic finance from BNM, they focus on the promoting effective integrations of Sharia governance and the risk management, which is within the operation and the processes of Islamic financial institution. Also, they strengthen the compliance with Sharia standards and the operationalizations of Sharia contracts. And the legal framework for banking regulations of the conventional finance industry, which is Financial Service Act 2013, or more known as FSA. Actually, it has replaced the Banking and Financial Service Act 1989, the Insurance Act 1986, and the Payment System Act 2003, and also the Asian Control Act 1953. Which is all of this act. It consists of 80 parts and they contain around 281 sections of 16 schedules, including the amendment. Meanwhile, for the Islamic financial industry, the legal framework, which is for banking regulation that provided by the BNM, is Islamic Financial Service Act 2013. I bet all of you know, which is the IFSA. And actually, it replaced the statutes such as the Islamic Banking Act 1983 and the Takaful Act 1984. And all of these acts, it consists around 80 parts of containing 291 sections and the 60 schedules, which is no include no amendment. So I think that's all from me. Thank you.
Yes, thank you, Miss Ain, for your answers. So there are many acts that has been gathered by Bank Negara Malaysia for the legal framework banking regulation. Then I would like to ask Miss Hidayah. I would like to ask you. I would like to know what are the regulatory authorities for banking regulation in your jurisdiction. What is the role of the central bank in a banking regulation?
Okay, thank you, our moderator, Ms. Shahida. So, Malaysia operates a dual banking system, namely a conventional banking system operating in tandem with an Islamic banking system. Islamic banks and international Islamic banks subsist alongside conventional banking institutions and offer a wide range of Islamic financial products in any currency to non-residents and residents. BNM is empowered to act as the regulator of banking institutions under the FSA, the IFSA, and the Central Bank of Malaysia Act 2009. The Minister of Finance also plays an active role in the regulation of banks and Islamic banks and is the approving authority for applications for banking licenses with the power to impose conditions on such licenses. The Minister also has powers to revoke licenses and to direct investigations in prescribed circumstances. So, the supervisory framework applies to all types of financial institutions, thereby ensuring consistency in the treatment of similar risks throughout the financial sector and enabling consolidated supervision of financial conglomerates. Investment banks, which undertake capital market activities in addition to banking activities, are also regulated by the Securities Commission of Malaysia. The Securities Commissions of Malaysia is a statutory body established under the Securities Commission Act 1993 and is the primary regulatory authority for capital market activities in Malaysia. BNM and the SC cooperate in regulating investment banks and have jointly issued the guidelines on investment banks. In its role as the central bank, the BNM promotes financial stability, formulates monetary policy through its Monetary Policy Committee, advises the government on macroeconomic policies and managing the public debt, and is also the sole authority for issuing currency as well as managing the country's international reserve, regulates and supervises financial institutions which are subject to the laws enforced by it, oversees payment systems and money and foreign exchange markets.
Thank you, Miss Hidayah. Oh, it seems like Bank Negara Malaysia indeed does contribute a lot in this regard. In order to do this service, they must need some sort of permit to allow them to conduct it legally, right? Just like Ms. Hidayah stated, the minister plays an active role in the regulation of banks and Islamic banks and also as the approving authority for application for banking licenses with the power to impose conditions on such license. So I would like to ask Ms. Iman, what license are required to conduct banking services and what activities do they cover?
Okay, thank you, Ms. Shahida. Okay, as we know, every banking institution must have a banking license according to the Financial Service Act. There are two types of financial and banking institutions, which are investment banking and ordinary banking. Banking business we are defined as follow. Investment banking is about accepting deposits on deposits and providing finance, while banking business also doing the same thing plus paying or collecting checks. Any regulation of business will be based on capital market services license under the Capital Markets and Service Act 2007 SMSA, which has been prescribed by Bank Negara Malaysia (BNM) and approval of the Minister. Furthermore, Islamic banking, whether local or international, has the same process and procedure, but difference about them is international can use international currencies. This guideline is to set out the necessary transaction of Ringgit Malaysia between Islamic International itself and the resistant regardless their place. We can see the example such as Labuan Banking that under LFSSA is receiving deposits in Labuan investment banking business. Labuan Finance sells Labuan banking business and other under Labuan FSA that got approval by Minister will be bound by compliance with the applicable exchange control restriction under the FSA. In addition, the requirement for application must be public company under the Companies Act 2016 CE for the license of commercial, investment, and Islamic banking license. The process must be through BNM applications, fulfill all the criteria to the minister whether they can be accepted or rejected. Meanwhile, Islamic banking and international Islamic banking got same procedure to get the license, which is vision, process, and contract must be Shariah compliance in every aspect and build the provision in Article of Association Bank for establishment of Shariah Committee. However, digital banking is also being created for applicants to apply after licensing framework for digital banks licensing framework was issued by Bank Negara Malaysia. Unfortunately, Bank Negara Malaysia not accept the license application for now after their deadline, which was 30 June 2021. On top of that, BNM not provide any formal template for application of banking, whether it's conventional, Islamic, investment, or license of investment. Even though all of them have been stated in the BNM policies document on applications, procedure for new license under Financial Service Act 2013 and Islamic Financial Service Act 2013. That's all for me.
Thank you, Ms. Iman. It seems like we have discussed about all of the acts. Therefore, I would like to move on the next question. This is for all of the panels, which is what are the regulation of conventional products under Financial Services Act 2013 and Islamic product under Islamic Financial Services Act 2013.
All right, so thank you so much to our moderators. So for the next question, I would like to explain from the product, which is from finance, conventional institution and Islamic institutions, which is the insurance one is for conventional, while for the takaful is for the Islamic product under the Islamic financial. So for the insurance, which is under conventional, some of the act that highlight in the Financial Service Act 2013, which is the arrangement of Section 1, Part 1, preliminary, Section 5, classifications of and the constructions of reference to insurance business. Next is Part 5, Prudential Requirements, Division 6, Insurance Funds, which is under the Section 81, the establishment and maintenance of the insurance funds. Sections 82, the requirements relating to insurance funds. Section 83, withdrawal from insurance funds. While next is Section 84, under the assumptions of the risk. And besides that, they also have a highlight the business conduct and consumer protection, which is under Part 8, Division 2, Section 1 to 5, which is the approved insurance broker, approved financial advisor, and also approved insurer of designed payment instrument to establish the customer account. While under the Islamic product, which is the takaful one, some of their regulation that highlight under Islamic Financial Service Act 2013 is arrangements of Section Part 1, preliminary. Section 5, specifications of and the constructions of reference to takaful business. Part 3, authorization. Division 2, licensed takaful operator to carry on family takaful or the general takaful business. And next is part 4, under the prudential requirement, Division 5, appointment of actuary by licensed takaful operator. Division 6, the takaful funds and the shareholders fund. And last but not least, which is part 9, under the business conduct and consumer protection. Division 3, under takaful issues, which is they come up with certain regulation, which is Section 139, obtaining takaful outside Malaysia. Section 140, provisions relating to takaful certificates. Section 141, the consular disclosure and representations and the remedies of mispresentations. And lastly is Section 142, which is they talk about the payment of takaful benefits under the family takaful certificate, and also the personal accidents by the takaful certificates. So maybe that's all from me.
Thank you, Miss Ain. Maybe Miss Hidayah, you have something to add on to this question?
Okay, thank you. Okay, for this question, I would like to explain for the conventional, which is under FSA, Part 9, Money Market and Foreign Exchange Market. Under the Money Market and Foreign Exchange Market, there are Section 140, Power of Bank to specify standards or issue codes. Section 141, Prohibited conduct in money market and foreign exchange market. And lastly, Section 142, Arrangement with relevant supervisory authority. So, while for the Islamic part in IFSA, which is Part 10, Islamic money market and Islamic foreign exchange market. So, under this part, there are two sections, which is Section 152, Power of Bank to specify standards or issue codes, and Section 153, Prohibited conduct in Islamic money market and Islamic foreign exchange market. To add on, there are also one section, which is Section 154, Arrangement with relevant supervisory authority.
Thank you, Miss Hidayah. And I would like to ask Miss Iman about your opinion or your thought about this question.
Okay, thank you, Ms. Shahida. Okay, I will explain about the conventionals of deposit. Okay, in the Financial Service Act, it also explained in the Part 8 of Financial Service Act, Business Conduct and Consumer Protection. He also explained about the details what about deposit. Okay, and also the restrictions. The restriction application of these divisions. Divisions 5, restriction relating to consumer protections. Restriction of accepting deposits. Advertisement of deposits and restriction on use of certain words for deposits. Okay, they also stated that the punishment in details about the imprisonment and a fine of 5 years for the prisons and fine not more than 10 million ringgit or both of them. Meanwhile, for the IFSA, it's also stated that the deposit in the Part 7 of Islamic Financial Service Act, the Business Conduct and Consumer Protections, Division 5 restrictions relating to consumer protections, Section 147's application of these visions, Section 148 Islamic deposits that explain details about the Islamic deposit have to comply with the Shariah compliance in every aspects. And Section 149 is also stated the restriction on accepting Islamic deposit, same as Financial Service Act, and also the restriction on use of certain were also the punishment that be stated in the Islamic Financial Service Act that someone who violates the subsection 1 will face the consequences of being imprisoned not exceeding 8 years or fine not more than 25 million or both of them. I think that's all from me. Thank you.
Thank you to Ms. Iman and all of the panel. It seems like every panel has explained all of the regulation and guidelines provided by the Bank Negara Malaysia in detail. Apart from that, we have come to know the product of conventional and Islamic banking under the Act that has been enforced, such as insurance, takaful, money market, and foreign exchange market, and also deposits such as businesses conduct and also consumer protection. I hope that this forum discussion will enable us to all of us to learn more and put it into practice. Thank you for your willingness to participate in this forum discussion. I hope that this kind of program will be held again to give more knowledge to the public. Your cooperation and attention are much appreciated. Thank you so much. All right, that's all for today. Thank you.